Dave, how's it going? All right. My book right here. Uh, you had to have owned shares of the spinoff to do an April 5 or an April 12. Okay, but why did they go to monthly options rather than the weekly options? Because I went to buy some weekly options and they got rid of them. Is what it is, right? All right, so that's a good one to take a look at. 3M. All right, so we're taking a look at 3M first thing this afternoon. Just take a quick look at it. A year ago, 3M was at 105. We topped out at 3M at 113.02, and that was the end of July. Okay, end of July was the high of the year. Now from there, Patricia, how are you doing? Thank you for coming. The bottom of the year was 10.23. That was October 23, and that was 85.46. Okay, fine, dandy. I like the way it moves. Up, profit taken, up, profit taken, up, profit taken, up, whoa, profit taken, yeah, up and down. I love the movement, consistent. I love consistent movements. It gives you an idea that, hey, the stock keeps on moving. So last 90 days. Hey man, you're the first investor I came across that uses the same strategies I do. Well, bloody jolly good there, laddie. I sell out every week. Puts. Okay, yeah, I don't do puts. Don't. I only do calls. But, the thing is, we'll see. I'll keep my eye open. But at this moment in time, this trading strategy is specifically designed for my 9-year-old daughter. Hey, back here again. You hear Elvis every day. That's cool. Learning something new. I created this fascinating football videos. How's it going? Hey, Tony does what? Okay, so this was created for my 9-year-old. WBA, Jim, we'll take a look at that. WBA Walgreens. Yeah, so as I was saying, this was created for my 9-year-old daughter, back in 2008, when she wanted to know what dad was doing. She was 9 back then. Now she's in her 20s. Like, oh my God, we're 25 this year. Anyway, so here's the thing. She wanted to learn what I was doing. So basically, I had a challenge. What's the challenge to teaching a 9-year-old how to invest? I like to sell puts on stocks I plan to own long. Yep, that's a great idea. Call it cash covered puts. That's a great plan. Okay, so I had five criteria I had to meet. Number one, it had to be simple. Number two, it had to be safe. The income had to be predictable, had to be consistent, and there's no way she could possibly lose. Safe, simple, predictable income and consistent income, and no way she could lose. So how was that? So I came up with 5 rules. Rule number 1, never buy something you do not plan to hold for the long term. Okay, long term may be something different to you, but me, longest I've ever held anything is 9 months. Okay, I like to get in, get out. So number 1, never buy something you do not want to hold for a long period of time. Number 2, never sell at a loss. Number 3, RDJ, you've got to be kidding me. T-bills? I haven't seen a single T-bill that paid over 20%. Never. Number 3, have to have 20 years of increased dividends consistently every year, year after year, 20 years minimum. 4, weekly options available. Number 5, the numbers have to work. Now, RDJ, why I say that? Because T-bills, I don't want to say that. I am way over invested right now, bought with spreads and nothing moving yet. Yep, I hear you. You said guaranteed. I never said guaranteed. Oh my goodness. I said safe, predictable, consistent. Simple, safe, predictable, consistent. 1% per week. I'm making it 1% per week on average. Nothing's guaranteed except for death and taxes. Okay? Death and taxes and being screwed over by the government. 3 things. There you go. Death, taxes, being screwed over by the government. There's your guarantee. Anyway, let's take a look at 3M. Okay? And I never said, never, ever did I say nothing's guaranteed in the world of money. That's true. That is true. Okay, so 3M last 90 days. So 90 days ago today, we opened up at 109.23. Okay, the high of the 90-day period, which is the middle of January, 110.16. Okay, so right towards the end of January, we gapped down from 108. We dropped all the way down to 92. 108. From 108 to 92. That's 10, 16. That's 16 bucks. It's a $16 drop. That's kind of heavy. Okay, so from there, kind of keep on descending to the bottom. Now, I'm going to say the previous bottom. The previous bottom was on the 4th. Okay, and that was 90.48. Now, she gapped up on the over the weekend between the 8th, on the 11th and the 12th. Yeah, all right, so she gaps up on the 11th, between the 11th and 12th. Shoots on up. And it's not 8th, well, it might be. Oh, hold on, let's go look at the 30 days. 30 days, okay, 30 days ago, we opened up at 92.04. The very next day was the previous 30-day bottom, and that was on the 4th. That was 90.48. Then we jump up to a double high 2 weeks ago. Yeah, the IRS is guilty of extortion, robbery, usury, and a few other things. Talking about a RICO. Yeah, Tony, I got you on there. I like the wall art you have there. Isn't that lovely wall art? That's lovely. What's on your watch list for Q2? Well, you're going to have to chill, hang out, and just watch. It's really not that difficult. Your new favorite show at 9 p.m. every night. Okay, so we topped out on the 20th and the 21st, and the top was 109.19. We got someone else over here on Instagram. Hey, over there on Instagram, people. YouTube, we got 2 people on YouTube. All right, so for those of you that are new here, never been here before, this screen right here is being live broadcast on YouTube. That10minutetrader.com. This is live on YouTube, so get you to be able to see these numbers a little bit better, because I'm going to point to these numbers all night long. Okay, you get the last trade, the bid, the ask, the volume, the open, the high, the low, blah blah blah, all that kind of nasty stuff. And then we're also going to be looking at the weekly options. Okay, you really want to be able to focus on these numbers because they're kind of small here. Okay, so I don't know if you can see them, but they are live on YouTube. So this screen here is live on YouTube, so you can see that. Thoughts on HAS? Well, let's take a gander at HAS. I'll write that down. We'll take a look at it. HAS. Isn't that Hasbro? I think so. I don't know. SBLK. SBLK. That sounds like an ETF. All right, we'll take a look. All right, so as I was saying, all right, before I go any further, first of all, I'll let you know this is entertainment. I don't know jack shit, Don. I don't know jack shit, dilly squat, nothing. Okay, I implore you, I insist you guys do your own research. I'm just going to read the numbers. I didn't miss AMC talk, did I? No, Tony, not yet. AMC. I'll write that down. AMC. Okay, so as I was saying, I don't really know anything. Really, I don't. Okay, I take a look at the numbers. I go at, I'll read the numbers to you. I'll do a little bit of math. I'll read the charts to you. But I implore you, I suggest anyone and everyone do your own research. 5 simple rules. Never buy something you do not want to hold for a long period of time. Okay, thank you for that. Hasbro is off the list. HAS. It's a monthly. I don't do monthlies. We'll get into that in a little bit. Number 1, never buy something you do not want to hold a long time. Number 2, never sell at a loss. Okay, if you buy something that's a good quality company. Number 3, make sure it has 20 years of increased dividends. 20 years. So why would you get rid of it if they're increasing their dividend every single year for 20 years consecutively? Okay, now number 4, make sure it has weekly options. Why? Because I want a weekly cash flow. I can't get weekly cash flow with monthly option companies. I can't. Okay. Now companies, they pay out dividends. They pay on a quarterly basis, 4 times a year. So how can I get weekly cash flow if a company I invest in pays 4 times a year? Now, what if they have monthly option? And that's 12 times a year. Okay, can't do it then either. I look for companies that have weekly option. Reason being is every single week I can write a call option against them. That's a lot of competing prints. Probably is. Okay. But anyway, let's get back to what we're talking about. Okay, always remember the 5 rules. Never buy something you do not want to hold long term. Never sell at a loss. Make sure that has 20 years of increased dividends, because if and when stocks go down, you at least get higher and higher dividends. Can you look at RCL? Their financials are finally growing compared to blah, blah, blah. How do call options work? We'll get to that. Explain call options. I'll walk to that. How do you aim for 1% a week? Tyler will get to that. XRP down, 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 down. Really don't care. Please do not suggest cryptocurrency to me. Here's another thing I have to touch on. Okay, now, I'm assuming you've seen the videos I've done online. There's like 600 of them now by now. I like doing videos. I'm a ham. What can I say? All right, anyway, besides the point. All right, there are 12 that I know of. 12 people pretending to be me. Okay, so if you get an email, a text, a DM, whatever kind of interaction, someone saying that they're me, asking you for money to cool, really great cryptocurrency, or me helping you trade or whatever, it ain't it. No, it ain't it. Okay, now if I'm going to ask anything of you, I tell you this, and only a few people actually take advantage of it. It kind of boggles my mind. You want to talk to me and you want something, okay? DM me with your phone number and I will call you. Seriously, I will. You can ask people in the chat, does James really call? Yes, James does really call. Okay, I love talking to people. I'm at the point in my life where I feel compelled to share what I know. Okay, now, I know a lot. Okay, it can be helpful. I've helped a lot of people here. What's the next move? NBI, we'll get to that. I've got 4 people within similar names pretending to be. I'm sure they do. Okay, but like I'm saying, if you have any questions whatsoever, please don't hesitate. Hold on. I have been getting follow requests from your name. People are making fake accounts with you. Yes, they are. Hey, Jen, how you doing? Jen's here. All right, save all the talk, folks. Just divide your portfolio into the major sector index funds. Yeah, lovely. What about DNP, ARK Investments? Okay. RJD, ARK. Really, does ARK pay 30% or more per year? Really? ARK, do they pay dividends? And do they have dividends for over 20 years? DNP. Okay, so when you guys give me suggestions, all right? Okay, when you guys give me suggestions, I write them down. We take a look at them. Now, I've been doing this. SBucks? Yeah, we'll take a look at SBucks. SBucks is on my list. Okay, so far I've got 6 suggestions. Out of those, I know 2 of them for a fact are on my list. Why do you think SBLK? What do you think about SBLK? I got that written down, dude. You're just gonna have to wait. Yeah, we are gonna take a look at it. Okay, so you guys give me a list, okay, and I write them down as you do them. Okay, they are AI's innovative ETFs. Yeah, I don't do ETFs. Okay, now you might be asking why I don't do an ETF. Because I haven't met a single ETF that pays over 30% yet. Haven't. Okay, if by chance an ETF is going to pay over 30%, great, I'd take a look at it. I would suggest it. I would recommend it. Okay, but they don't. Why? Because they don't. I don't know a reason why. Okay, so what did I do with the ETFs? I went into the ETFs. I'm going to show you right here. I went into the ETFs and I extracted the stocks out of the ETFs. Okay, see them all? Each one, oops, I gotta turn this right here a little bit. There we go. There you go, buddy. There you go. Let's open this up a little bit. JEPI is another ETF, and I don't understand why you don't grasp it. It's really not that difficult. Number 1, okay? If you guys are gonna suggest something, please leave. If you're gonna suggest anything, 20 years, okay? 5, 10, 15, 20. 20 years of increased dividends. It's really not that difficult. JEPI does not have 20 years of increased dividends. It just doesn't. Okay? Most ETFs don't. Okay? And then they have to have weekly options. JEPI, I'm pretty sure, has monthly options. They do not work. Okay? They do, but you only get like 24% return. Why would I want to do that? Okay? If I can get a safe, secure, predictable, consistent 1% per week, why would I want to get 1 or 2% per month? Think about it. It just doesn't make sense to me. Okay, now I didn't go to college. I got no fancy degrees, no big alphabets after my name. It's not, Sir James Esquire, Perk Accountant, PhD, none of that crap. I'm just a regular average guy. I went to school. I graduated top middle of my class. Top middle. You got that? Top middle. Yeah. No. I didn't go to college. No, I went to college, but I didn't go to college, if that makes any sense to you. I said C Corp years ago. I didn't understand the structure, and finally just stopped running it. Yeah, Tony, if you really want to take care of a C Corporation, you get your family involved in it. You have to write off all the taxes. You have to pay no taxes whatsoever in the C Corp if you do it right. Okay, you take your training account, put it into the pension, the corporate officers pension fund. The only thing bad about that is all the officers in the corporation have to have equal access to the funds. Okay, so basically, if it's just you, your wife, and your kids, okay, great, all of them have access to the fund. Okay, so yeah, and the money is tax-free until you take the money out. But then again, there's other ways to avoid that also. So yeah, a C corporation or a trust, best way to do it. But anyway, let's get back to what we're talking about. I have no idea what I was talking about. Oh, so needless to say, if you really have any questions, you really want to know, Merck is on the list, M-E-R-K. M-E-R-K. Okay, DM me with your phone number. Okay, if you really want to know, DM me and I will give you a call. Why invest in dividends when you risk the stock being called stock falling? Just put it in the S&P 500. Okay, listen, Isles? I'm in Canada, I'm in the US. Okay, O1Z. Okay, interesting advice, and there's absolutely nothing wrong with putting your money into the S&P 500. Really isn't. The S&P 500 has averaged 10% per year for the past, 100 years. Okay, great. If you're okay with 10% per year on average. Okay, I average 1% per week. Okay, that's 50% per year. Me, I didn't go to college, but I do know that 50% is much better than 10%. I could be wrong. I like that you didn't have to pay taxes on the first $50,000 and no Nevada state taxes. Okay, Tony, that's cool. I'd like to learn that little trick. Not that I pay taxes as it is. That's besides the point. But it's always good to have information like that so I can pass it on to other people. Because the powers that be want to eliminate TikTok. Why? Because they don't want us talking to each other. They don't want me sharing what I know with you. They don't want you sharing what you know with people like me. Because there's a lot of interesting shit I've been learning on TikTok. It is just unbelievable. You got somebody bringing a video camera into Congress, watching congressional hearings, and we actually get to watch and listen to exactly what's going on. So when the idiots on TV tell us one thing, and we're actually seeing it happening live on camera in Congress, listening to the congressmen make points and arguments and questioning, it's like they don't want us to do that kind of stuff. That's what they're afraid of. They're afraid of me and you talking to each other. There's a lot of information out there. There are a lot of good people out there, but there are a lot of scams out there too. So that's why I'm going to get back to that again. There's 12 people pretending to be me. So if you really want to be, if you're really interested, you really want to hear from me, call me. No, you can't call me. I get spam blockers on my phone, so I only have outgoing calls. If you call, you have to leave a message, and I'll call you back. But don't call, don't leave a message. I had 172 messages I had to go through this weekend. It took me forever. But anyway, if you really want to call, DM me with your number. I'll give you a buzz. Really, I will. Anyway, let's get back to the point. We're looking at 3M. Yeah, so anytime you suggest anything, please make sure, if you're going to suggest anything, 20 years of increased dividends and weekly options. It makes things go by so much quicker, and you'll learn a lot more rather than me saying no, 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 trying to explain things. I got zero trust in the government. I got too many stories. Tony, you and I should hang out, have a beer, watch the sunset, watch the grandkids play, and just sit back and enjoy life. Okay, that's where I'm at in my life. 60 years old, don't want to do anything anymore. Yes, I'm well aware the financial collapse is imminent. Really, I am. Okay, now people say, why are you investing in the stock market? Well, I'll tell you why I'm investing in the stock market. Most of the companies I look at are over 100 years old. What does that mean? 100 years old. Procter & Gamble, Colgate-Palmolive, Bank of America, Wells Fargo, ExxonMobil, there's a whole bunch of them. There's about 150 of them, over 100 years old, still paying dividend. So why? What's your average return since you started this strategy? It's about over 50% per year. What should I put? I can't tell you that. I can't tell you where to put your own money because I know nothing about you. Okay, this will be the system collapse. Yeah, probably will. But here's the thing. Let me ask you an interesting question. SWK, that's Stanley Black & Decker. SWK. All right, so for those who think the economy's going to collapse, yeah, it probably will. But here's the thing, what you guys are forgetting, or you guys overlooking, they're trying to scare you out of, especially guys like RDJ. You're investing in stock that pays dividends, which is strategy. I'm going to tell you, just hold on a second. Okay, stop asking the questions. I got to keep answering these things. Starting with $100, trade yourself 2703. Okay, whatever. Beam target, yep, lost everything 10 minutes. Okay, yep, okay. Wait a minute. Let me tell you why. Okay, why I like the stock market. Here's the thing. There's over 9,500 different companies you can invest in. I only look at 150. Why? Because, here's the reason. Most of the companies I look at are over 100 years old. So what's happened in the last 100 years? Well, let me enlighten you in case you missed history or in case they didn't teach you this in school. World War I, World War II, Korea, Vietnam, stock market crash, the Great Depression, Afghanistan, Iran, Iraq, the Gulf Wars, all that crap. You had the oil embargo of the 70s. You had the stock market crash. You had the stock market crash in '87. You had the dot-com burst in the 2000. You had Y2K. We had the financial crisis. We had what was that? The pandemic. All this shit has happened over the last 100 years. And what does Coca-Cola, Altria, Colgate Palmolive, Home Depot, Lowe's, 150 different companies consistently increasing their dividends. Consistently, every single year. Through all that crap, they're still here, they're still paying, and they're still increasing. Okay? Yes, they will survive. Can you picture a world where Coca-Cola no longer makes Coca-Cola? I mean, come on. Can we went through all those wars, all that crap? They're still making Coca-Cola over 100 years later. Okay, Procter & Gamble, still in business, still making toothpaste, toothbrushes, hairbrushes, combs, all that crap. Clorox, okay, it's a household name. Everybody knows who Clorox is. Core USD. I have no idea. No one can afford to live, man. All right, Jake, I really don't tell what you say. I live perfectly fine. Okay, you can't time the market. You have the right strategy. Okay. All right. You have bias that things will repeat like they have in the past. No, Jake, I don't. Okay? I'm pretty confident. I'm pretty confident that Coca-Cola is going to continue to make Coca-Cola. Pretty confident Pepsi is going to continue to make Pepsi. Pretty confident Bank of America ain't going anywhere. You need to take a look at their list of what they have in their assets. Wells Fargo, same thing. AT&T, Colgate Palmolive, Philip Morris. I can go hundreds of companies that have been in business. Consolidated Edison, 200 years they've been in business, and they still pay dividends. Okay? GPC, Genuine Parts Corporation, 70 years. That's 7 decades. Kennedy was in office, and they've been increasing their dividends consistently, every single year. So the economy goes apart. Big deal. They pretty much guarantee they're going to make Coca-Cola next year, the year after. Hell, 50 years from now, they'll still be making Coca-Cola. Okay? So, whatever you think, do what you think is best for you. This works for me, and I'm going to continue doing what I think works for me. Do you think that oil stocks paying dividends? Yes, a lot of them do. Hershey's. Yeah, Hershey's if you go. Dividends make the most 5% per year. How are you making 30%? Okay, RDJ, I make over 50% per year. Okay, you're new here. I'm really good with names. Okay, just hang up. Randall Ray, how you doing? Back again. Okay. Sit, for those of you that are new, just sit and chill. Watch how I do it. If it makes sense to you, fine. If it doesn't, you do wasting a couple of minutes. Okay? Now, let's jump in, take a gander at what's going on. All right, so WBA, Walgreens, Randall Ray, 1% per week. Randall, what did you make this week? I'm just listening. Zero input from me. Hey, Luke, how you doing? All right, WBA. We all know who Walgreens is. Walgreens has been in business for over 100 years. They've been consistently increasing their dividends. I like Walgreens. So let's take a look at it. What's Mark can't find? All right, we'll take. Oh, Mark, it's MERK. That's it's a big drug company. Or is it MRK? It could be MRK. But Jen, we'll take a look at that. Okay, everyone on the list right now. Jen, she's doing freaking awesome. I think she's averaging ORC. ORC. Is it Oracle? No. Oracle's ORCL. MERCK. Okay. MERCK. Okay. Thanks. Tony, thanks for that. AbbVie. Yep. ExxonMobil. That's on the list. XOM. Okay. AbbVie. We'll take a look at that one. ABBV. All right. No more for a while. Let me get rolling on this. I don't want to look at it. I'm asking the person who. Oh, put it on the list. Okay. All right. Let's take a look at Walgreens. Walgreens is WBA. Okay. Look at where we were a year ago. Way up here. Walgreens falls down to here. End of December, we're down pretty low. But look, she bounces back at the beginning of the year, drops back down. And we have a new bottom right here, 1872. What's going on with that? Energy transfer. Energy transfer. ORC is a REIT. I don't do REITs, only because the numbers don't work, and most REITs are monthlies. ET. Everybody wants to look at energy transfer. I look at energy transfer every week, and it still comes up a no every time it comes up. But I'll take a look at energy transfer. See? On the list. We'll take a look at it. Okay, Walgreens. Why did Walgreens take a big dump? Ooh, that's the one. We were thinking this morning, which BST? Never heard of them. BST. All right, I'm going to stop the Chevron CVX. CVX. All right, I'm turning off the comments because I'm not getting anything done. All right. Okay, here we go. Comments are officially off, so I can actually go through some of the stocks. Okay, so we'll go through some of the stocks. I'll get halfway through, then I'll turn the comments back on. Okay, I have ADD, so I get distracted very easy. So when I see this going up and down, I see all the questions, I got to stop what I'm doing and read them. Okay? All right, so let's stop that and go over the numbers. Okay, Walgreens, a year ago today, we were at 35.09. Now, the high of the year for Walgreens, 36.54. Okay, you see it right over here, 36.54. For those of you guys who can't see this, this is broadcast live on YouTube. If you need to find YouTube, right here up in the bio, just click on the link. The link will take you to. Oops, hold on a second. Right here. The 10-minute trader. Keep going, keep going, keep going. There it is. The 10-minute trader. On the 10-minute trader, here's a quick little video telling you about the how to do the trades. This now explains about no risk trading. Blah blah blah. Here's the live trading for the mornings. Okay, we actually do a live trading every morning. And here's all my social media: YouTube, Twitter, Facebook, Instagram, blah blah blah. YouTube Live is right there. Okay, see it? Click on YouTube Live, and you'll get to this. It's a fun thing. You click on this button, you'll get to the screen. Yeah. Let's get back to that screen. Oh, and while you're there, slide down a bit lower. These are all the trades I made this year. So you can actually track every single trade I made. You can check out whether or not, okay? 1%, 2%. Those are weekly trades. Okay, so let's go back to, where was I? Right here. Okay, we're at Walgreens. Okay, the previous bottom was 1978, and that was the beginning of December. The last 90 days, we had a high 90 days ago. Okay, 90 days we had a high. Okay, from there, it was 27.05, slow drop, and the new bottom was today. Today's bottom was 1867. Okay, so let's look at the last 30 days. Last 30 days, 30 days ago, we opened up at 21.19. Went sideways for a bit. The 30-day high was on Thursday. Okay? Thursday. Monday, Tuesday. Now we're way down here. So the 30-day high was on Thursday last week. 2 days later, we're at the 30-day bottom at 1867. Now, for those of you who don't know what this is what's called a seasonality chart. What is that? Well, the blue line represents movement this year. Okay, the red line represents movement over the last 10 years. That's the average movement over the last 10 years. So they take 2014, 2015, 2016, 2017, and pile it right up on top of each other, one chart after another, from January 1st to December 31st. Okay, and then they give you the average over the 10-year period. Why can't I see this whole thing? Let's close this a little bit. Right there we go. All right, that's better. Okay, so this is the average movement over the last 10 years. Okay, slow down. Okay, so you buy it in January, it's slowly going down. Okay, it makes me a little uncomfortable, but here's the thing. Walgreens has been in business for over 100 years. I don't think they're going in there. They're in almost every major city in the United States. Almost every major city has a Walgreens. All right, so in the next 2 weeks, okay, basically it's going to go sideways. Okay, fine. What great trading strategies are there for a sideways market? Well, you have covered calls and you have spreads. Now, we don't do spreads here because it's a little bit more complicated. Covered calls is one of the easiest trading strategies there are. Okay, so you buy the stock. Okay, at this moment in time, this stock is going for 1886. Okay, now, here's a little clue. Now, you can't answer this because I have comments turned off, but here's a little clue for those you may not know. Now, the last trade, okay, last trade was 1872, right? The bid, 1884, the ask, 1886. So both the bid and the ask are higher than the last trade. What does that mean? That's a clue. That is a clue that the market maker is going to push it up tomorrow. Now, when the bid and the ask are lower than the last trade, the market maker is going to push it down. So that's a little bit of clue that the market maker is most likely going to pop it up tomorrow morning. We'll see. Now, I don't think I bought any Walgreens this week. No, not in that account. Not in that one. And not in that one. So no, I don't have any Walgreens this week. But just in case you do have some Walgreens, this is what it's going to look like. 1886, okay, the closest strike price is the 19s, okay, and the 19s are going for 19 cents. So you want to know how I make a safe, secure, predictable, consistent 1% per week? Here you go right here. Perfect example. Walgreens. Number one, it's over 100 years old. Okay, they've increased their dividends consistently for more than 20 years. Okay, I don't know exactly because I'm not looking at it. It's on my list, so it stays on the list until I look at it and someone tells me to take it off. But anyway, if I buy it tomorrow at the market opening, okay, I can sell somebody to the right. Okay, 1886. I can sell it to someone else at 19. All right, collect 19 cents a share. Now I know 19 cents a share doesn't sound like a lot of money, but you pull up your calculator. Where is it? Calculator, calculator. There you go, calculator. Okay, now if my profit's going to be 19 cents per share and it's costing me 19 cents a share, okay, and it's costing me $18.86, my profit's going to be 1%. Now, here's the kicker. If the stock goes above 19 between now and Friday's close, because it goes to the Friday's close on, what do you call it, this week, I will collect an additional 14 cents because the difference between 1886 and 19 is an additional 14 cents. So I'm collecting the 19 cents right off the top as soon as I sell the option. Then I'll collect an additional 14 cents if it stays above 19 come Friday. If it doesn't, I take Walgreens into next week. Just to let you know, I had Walgreens for 12 weeks this year. 12 weeks. Okay, now the question is, what happens if the stock goes down? Well, it's exactly what happened. Let's go and I'll actually show you some of the trades. There we go. Blah, 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 blah. Oh, that's 3M. WBA. Okay, so here's WBA. 325. Oh yeah, okay, so I bought that last week, got out of that last week. Okay, here's all the trades I made for Walgreens. 2-5, that's February 5th, the first week of February. Okay, I bought it, sold it, got a little over 1%. Okay, didn't hit my target. I carried into week number 2. I did it again, over 1%. Week number 3, little under 1%. Week number 4, under 1%, but I collected the dividends. Week number 5, I doubled down. Okay, got some more premium. So I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 premiums and 1 dividend from Walgreens this year. Okay, I'm up over 15% on Walgreens. Okay, that's not bad at all, in my humble opinion. Okay, and it's a company I don't mind holding on for a long time. At this moment in time, I don't have it because I got out of it last week. Last week I jumped in at $20.98. I sold the 21s, made I think 3 or 4% last week. Now here's that last trade right here, one at the top. Okay, I got 83 cents. Okay, so let's put my calculator up. Okay, so you see the very top trade right there, the very top green one. That's where I bought 2,200 shares and I sold 22 contracts. Okay, so I'll clear this out of here. I collected 83 cents and I paid $20.98 per share. So what's my price per share? Okay, 3.9% for that one trade. Okay, now 3.9% is really not that bad for 1 week. And here's another kicker. Not really that big, but 20.98 and it was over 21 for the week, so I got another 2 cents. Not that big a deal, but that would have brought me over 4% for the week on Walgreens. Okay, you guys drive by Walgreens whenever you go downtown because Walgreens in almost every major city. Okay, so yeah, so I've had Walgreens. I did very nicely. Walgreens is at the top of my list. Top of my list is Walgreens, Kohl's, Macy's, General Motors. Okay, you've heard of every single one of those. So listen to the list. Walgreens, Kohl's, Macy's, General Motors, Comcast, Emerson, 3M, Capital One Finance, Alcoa, Morgan Stanley. You guys heard of all of them. I'm not doing anything wild and crazy. It's like, oh, I've never heard of them before. You heard of every one of those. So I personally don't see the risk when you buy a company that's been in business for over 100 years, serving the economy, because Walgreens, we're all going to need our drugs, especially nowadays, prescription drugs. Okay, time out. Prescription drugs. Okay, pharmaceuticals. Yeah, Walgreens. CVS, same thing. All right. All right, so that's Walgreens. Let's jump in and take a look at another one. I can go so much easier when there are no questions going by. SBLK. For some strange reason, that sounds like an ETF. SBLK. Star Bulk Carriers? Never heard of them. Monthly. That's why. Monthly. Don't do it. Ain't worth the time and effort. Okay, and I'll explain to you right now why it's not worth it. Right now, I could buy it at $23.86. So yeah, $23.86. The chart doesn't look that bad, but I'm not even going to look at the chart. You know why? Let's look at the numbers, because certain things have to all work together. Okay, I need to know when the dividend is going to be. At this moment, I really don't care. But then the chart, then the numbers. But I'm going to just show you the numbers quick and show you why I don't like monthly optionable stocks. All right, so it's at $23.67. All right, so the closest option we have is this one right here, 19 April 24. What's that, 2 weeks out, 2.5 weeks out? Now, $23.86, the closest one is right here, the 24. Oh, look at this. It's giving us 40 cents. That's more than 1%. Let's do some fancy math. Fancy math, what does that mean? All right, I'm collecting a premium. Now, if you don't know what a premium is, when you sell a call option, okay, call strike, covered call, buy right, however you want. There's a lot of terms for it. When I sell a call option, I'm collecting the strike price. The strike price is 24. Okay, the premium is what I receive. Okay, I'm selling it. Someone else is buying it. Okay, so if someone is buying it for 50 cents, okay, someone, Tony, Fred, George, Kathy, Oscar, whoever, is buying it, they're paying 50 cents. But I'm only, as the seller, I'm only receiving 40 cents. So I really don't care about this number because I'm not buying. I'm selling. I'm collecting the 40 cents. Now, I take the 40 cents that I'm collecting. Thank you very much. That's so nice of you to be considerate of me giving you 40 cents per share. I'm going to divide it by the purchase price. Again, purchase price, $23.86 divided by 23.86. And look at that, 1.67. That's awesome. However, it's a monthly option, which means there's 4 weeks in a month. If I divide that 1.6 by 4, I'm getting 0.4 per week. Okay, 0.4 per week. Okay, that sucks. Why would I go for less than 0.5% per week when I get 1% per week using a weekly? That's why I don't like monthlies. People keep asking me, and O is the biggest one. Oh, it's a realty company. It's a real estate trust. Great, they pay monthly dividends. Wonderful. They've been paying for 2 years. That's it. 2 years they pay monthly, and they pay monthly dividend. Okay, they pay a monthly dividend, but they've only paying a monthly dividend for the last 2 years, and not 20 years. I like 20 years. Okay, 20 years of increased dividends. Why? Because when the market crashes, it's going to, let's not kid ourselves, the market crashes, correction, recession, whatever you want to say, every decade there's one. So I don't kid myself. That's why I always stick with companies that I know. I've never heard of SBLK before. They may be a great company. They may have the greatest people in the world working there. However, the numbers don't work for my dollars. I'm 60 years old. I don't want to go back to work. Okay, I make a nice income, 1% per week. I live very comfortably. I do. And I have no aspirations for a Lamborghini, Rolls Royce, Maserati, Bentley. I have no desire for those kind of things. A car is nothing but a vehicle to get you from point A to point B. Okay, I bought a car for 50 bucks once. 50 bucks once. It got me from point A to point B. Okay, I bought another car. Oh, I remember that one. Oh, it was the poor man's Corvette, an Opel GT. Looked like a little tiny miniature Corvette. I paid 165 bucks for it. I love that car. It was great. Anyway, besides the point. I don't have fancy taste. My girlfriend doesn't have fancy taste either. She don't. Just don't tell my wife that. Just kidding. All right, anyway. I live comfortably. Don't worry about me. So anyway, yeah, 1.6% on a monthly. You gotta divide that by 4. That's 0.4%. So for every $1,000 you invest, you get 40 bucks back. I'd rather get 100,000. What's the math? Clear. Okay, 100,000 multiply 0.004. Yeah, $400 a week. No thanks. I would prefer to get $1,000 a week. $100,000 account, 1% is $1,000 bucks. 0.4 is 400 bucks. How can you possibly tell me a monthly is better than a weekly? Sorry, I just don't do monthlies. Okay, remember the 5 criteria. Okay, safe, simple, consistent income, predictable income, and can't lose. Okay, so you have a company that pays the 5 rules. Never buy something you don't want to own for a long period of time. Star bulk carriers, never heard of them. Never heard of them. But you know what I have heard of? Let's go back to, I have heard of Walgreens, Kohl's, Macy's, General Motors, Comcast, Emerson, 3M. I've heard of all those. And those are all giving me over 1% per week. So why the hell would I jump into Star bulk carriers? Really? Okay, anytime you suggest anything, make sure you have 20 years of increased dividends, weekly options, and the numbers work. Let's look at the next one. Next one on the list is AMC. Isn't that American Motor Cars? Used to be. AMC, or is it AMC Theaters? AMC Entertainment. Okay. Wow, $3.10. Really? Do they even pay dividends? I mean, really now. How do we find that out? We go here. Yahoo Finance. Yahoo Finance. Right here, Yahoo Finance. Okay, and I'm going to put AMC over here. AMC. Hit the go button. Okay, pops it up. Now, I want to go over to here where it says historical data. This is Yahoo Finance. A lot of information they got here. Scroll down. I want to go to historical data. You can look up almost any stock, any ETF right here. Okay. Historical prices. Dividends only. And they have no dividends. So why would you suggest, whoever suggested it, why want to look at AMC if they don't pay out dividends? ARK, same thing. Let's take a look at ARC. ARK? Yeah, ARK. Kathy, what's her name? Okay. ARK, no dividends. I don't care how good she's doing. Okay, if the stock goes down, is she going to give me a monthly or a quarterly dividend? No, she's not. She's not giving me jack diddly nothing. Why would I invest in that? And out of curiosity, what does ARK own? Okay. ARK Holdings. Holdings data is currently not available for ARK. Oh, so she's not even telling what the heck is in there. Yeah. No, I'm going to say no to that one. Change her name to Kathy Bates. Okay, ARK is a no. DNP. DNP Select Income CF. No options. Come on, people. Give me something to work with. Starbucks is on my list. Not that it's on my list, it's on Warren Buffett's list. SBUX. Oh, what was that? Interesting. 89, the 90s. I'm going to say no to Starbucks. 2 reasons. You ready? Reason number 1. Here's the purchase price tomorrow morning, $89.48. The closest one's going to be there is 90. 42 cents. Yeah, no thanks. Reason number 2. We're at the we got a big huge drop. Okay, let's isolate that drop, get it into a little bit closer so you get a better view of it. Okay, she's been going sideways for the past month, right? This is sideways. See this? Up, down, up, down, up, down. I like 2 days to the upside before I jump into anything. That's a big drop right there. Okay, so I'd wait. Me personally, I'd wait to find a bottom, have that bottom turn around before I jump in. I like 2 days to the upside after profit taking. I love profit taking. Why? Because it's not a profit until you take it. Okay? Right here, look. It goes up 3 days, profit taking. Up, profit taking, up, profit taking, up, profit taking. Okay, that's the American way. It goes up, profit taking. Okay? It ain't a profit until you take it. And if you don't take it, the market maker will take it away from you. You'll see, we're going to get into a couple of charts where you'll see the market maker just sucked it away from you. Merck is a good one. Slide this over. MERCK. Merck and Company. Okay, it's MRK. I was right. 130. Okay, it's going to be a no again. Okay, reason why. The chart's not that bad, but look at the numbers. 130.79. The 130s, 108. The 131's 58. Not even close. Now, today's Tuesday, right? Yeah, today's Tuesday. So we're looking at 3 days. We might want to jump in to look at next week's. What did next week's numbers look like as opposed to this week's numbers? Because usually, with 3 days left, there's not enough money to play with. So the 131's still not enough money. Okay, so the 130.79 be best going off with the 131's. The 131's, $1.18. Not worth it. Okay, Merck is a no. SWK, that's Stanley Black & Decker, isn't it? SWK. Stanley Black & Decker. Ooh, I've been doing this too long. Monthly. We went through this already. Don't get me wrong. I love Stanley Black & Decker. Okay? They've increased their dividends consistently. Now, I do Stanley Black & Decker in a different trading strategy, okay? But not with this strategy. This strategy is safe, it's simple, it's predictable, it's consistent. Why? Well, my 9-year-old daughter, this is who I created this for in '08. It had to be simple. She was 9 years old. It had to be safe, okay? She couldn't lose money. If she lost money, what's the first thing she's going to do? She's going to cry, and that's going to make me feel like crap. Then the wife's going to give me a hard time because my daughter's crying. Yeah, no thanks. It had to be simple, had to be safe. The income had to be predictable, consistent. There's no way she could lose. That's the 5 criteria. So we came up with the 5 rules. Never buy something you do not want to hold long term. Never sell at a loss. Dividends 20 years or more of increased dividend. Increased dividends 20 years or more. And then weekly options. Okay, you may think, oh, who the heck is that? Well, you get the Dividend Kings, 54 companies, 50 years, continuously increasing. Dividend Champions, 147 companies, 25 years or more of increased dividends. Then you have the Dividend Aristocrats, 25 years of increased dividends. And then you have Warren Buffett's list. I love Warren Buffett's list. Okay? So, they're easy to find. Really not that difficult. Just got to know where to look. XOM. Somebody want to know about oil stocks? There you go. ExxonMobil. 119. Now here's, well, I was going to say here's a good one, but then I saw the chart. Look at this. See, here's the bottom here. Here's the bottom here. Look, all the way up there. Okay. For those of you guys who are interested in puts and selling short, hey, a perfect opportunity right there. If you think there's not going to be profit taking there sometime soon, you're nuts. Okay, there's going to be profit taking eventually. But here's the thing. The asking price, what I could buy it for, 119. The 119 is going for 179. That's 119.70. So the closest one's to 120. The 120 is going for 129. That's still over 1%. Okay? That's ExxonMobil. You know who ExxonMobil is. They've been around for decades. Ain't going anywhere. No matter what happens in the economy, ExxonMobil is going to be around. So is Chevron. So is BP, British Petroleum. All right, next on the list, AbbVie. We're getting ready to turn the comments on any moment. I got 4 more to go, and then we'll turn the comments back on. Okay, but you notice I can get a lot more done when I'm not reading the comments. All right, so just hold tight. We'll get there. We'll get there. AbbVie, ABBV, another good company. AbbVie is on my list. AbbVie, 180.69. Ooh, 182. Gotta love it. Okay. Well, that's not so good. And that's not so good. Look at the chart. Way up there. There's going to be some profit taking somewhere. But look at the numbers. 182. The 182. $1.19. No. Doesn't make it. Sorry. ET. Energy Transfer. I'm pretty sure ET is a monthly. No, it's not. Okay. All right, but ET is going to be a no. Okay. Why is ET going to be a no? Well, 1580, the closest strike price is 16. 7 cents? Really? Come on. No, to ET. And look at the chart. Okay? It's at a 30-day high, 90-day high, and an all-time high. Yeah, no. You're standing on a ladder reaching for the sky, or better yet, you're standing on a ladder waiting for someone to bring you a taller ladder. Yeah, no. Okay, BST. Who came up with BST? BST. BST. Blackstone. No option. No. Last one on the list, CVX. I'm going to open up the comments while I look at CVX. All right, comments are now open. Let them flow. See why I look at CVX. CVX, which is Chevron. 161. All right, that's a no also. What's all these crappy premiums? Okay, 161.50. The 162.93. That one, yep, no. T, I saw that one. Somebody threw up AT&T. I actually bought some AT&T this week. Let's take a look at the numbers for AT&T. 1754. That one works. And look at the chart. Jeff, me too. All right, hold on. Let me slide back a little bit. SPY, no. UVXX. Hey, I've shorted Lulu past month. Do you see more downside? All right, Creation Keeper. Yeah, I don't do shorting. Okay, remember this strategy had to be simple. It had to be safe. Okay, for my 9-year-old daughter. Okay, I have other trading strategies. I do, really. This is the only one I share for free. It is the simplest. It is the easiest. Okay, the income is predictable. The income is consistent. And if you do it right, there's no way you can lose. If you do it right. Tommy, how are you? Why do you do TikTok? Well, Tommy, I feel compelled at this point in my life to share information. And second reason, I'm looking for a small group of people that want to get together on a daily basis and actually go over trades and actually do trades. Thanks for that, Joel. Woohoo! Thank you. I have no idea what it means, but thank you. Anyway, I'm looking for a small group of people that want to trade. Okay, I answer all kinds of questions in the morning. Now, every morning, Monday, Tuesday, Wednesday, Thursday, at 9:15, we jump on a Zoom call so you can actually see my screen, and I walk through each and every trade that I do. Now, if you look here on my 10-minute trader page, go back up to this right here, the podcast. I've been doing a podcast for the past 4 years. Okay, this is 4 years worth of podcasts. There's over like 800 or 900 of them. Okay, so you can actually see every trade or listen to every trade I've done for the past 4 years. Now, I do have a blog that I've been doing. I stopped doing it years ago as soon as I learned about the podcast. But I forget where I was going with that. Anyway, UVXY. That sounds like what do you call it? Please look at Planetaire. Planetaire. You really got to give me the stock symbol sign that. I love no comps. Yeah, a lot gets more done. MCD. Okay, MCD was Mickey D's. MCD. That's probably going to be a no because they're outpriced. All right, I got to go through comments slowly. I love no comments. Yeah, so do I. Okay, user 447671. What was your parents smoking that night, dude? Really? Who comes up with a name like that? Just kidding. Palantir. Okay, number one, I've never heard of it. Okay, which means if I've never heard of it, most likely it's not going to be on the list and it's probably not going to work for this strategy. Probably. But number two, you got to give me the ticker symbol, especially with stocks I've never heard of. Me too, Jeff. Way to go. SPY. Nope, not at all. UVXY. UVXY. Yeah, it's an ETF. That's a no. Hey, I shorted Lulu. Lululemon, 378. Yeah, good luck with that one. I don't do stocks over 300 bucks. Hey, James, good evening. Why do you do this? Well, I do this to share information. Mickey D's, we're going to look at that one. Also, PLNT. PLNT. No, I'm not a broker. PLNT. That's Planet Fitness. Check Black and Decker for me right now. Yeah, Jim, I looked at Black and Decker. It was a no. It's a monthly. Okay, Planet Fitness is a monthly. It's a no. Stanley, of course. Yeah, we already did Stanley. SWK. Yeah, SWK was a no. Yeah, Chevron. Yeah, the 161s, 162. Yeah, that doesn't work. Abbott Labs and Home Depot. ABT, Abbott Labs, Home Depot. Home Depot pays a crappy premium. Tesla, Tyler, come on. Tesla doesn't pay dividends. Everybody knows that. MCD, 277. Okay, let's take a look at McDonald's. Reddit, Rivian, Reddit, Rig, all do not pay more than 20 years of dividends. Okay, Jim, no, Reddit does not have dividends, dude. And Reddit, I read an article, they don't plan on being profitable in the next 5 or 10 years. Why is investing so inverse? All right, Apple, I really don't tell you there. Do I like XRP? No, it has nothing to do with dividend stocks. All right, Mickey D's, 277. All right, a year ago today, Mickey D's opened up at 281.08. Any IPOs? No, IPOs don't have 20 years of increased dividends. AMD, where you looked at that one? Okay, we have our bottom, triple bottom. Check that out. How often do you see a triple bottom? On October, beginning of October, 246. Jumps on up, gives us a high of the year at 302. AMD. I think AMD is a monthly. AMD, but we'll take a look at it. Okay, high of the year. It's making M. Yeah, you see that one? Barely. TWLO. Never heard of it. If I've never heard of it, then it's not going to work in this strategy. Okay, MCD. High of the year, 302.39. And just to let you know, I don't do stocks over $300. Okay, now, last 90 days. Uh-oh, got to fix this. Pretend that I'm still here. There you go. Verification complete. AMD is a weekly. All right, we'll take a look at it. If you know so much, why aren't you a billionaire? Mike, I love it when people try to tell me how to live my life. What makes you think that I'm not? Okay, check this one out. CMAT. Yeah, no. I could tell by looking at it. Did you check WBA? Yes, we did. I asked and had to go to the gym for an hour, blah, blah, blah. Okay, this is a strategy. Yep, it is. VYM. VYM, I've never heard of that one. See, you make it sound like, all right, see, when people put up stuff, they make it sound as if they came up with something really cool, really neat, and everyone should jump on it. Until I take a look at it and tell them it's a piece of crap. LVS, in my humble opinion. Okay? Access to capital, LVS. That Elvis? Elvis is in the building! Elvis! Okay, so we're taking a look at MCD, Mickey D's. Okay, so the last trade was 277.74, 277.99. That's close to 278 to 277.50. So going for 315. Okay, so yeah, you got your number there. Last 30 days, which would be right about there. Okay, so here's my opinion. General Motors, we'll take a look at that one. Okay, Al. Al, we could talk about that one in the morning. Hold on a second. GM, we'll take a look at GM. I love GM. Any thoughts on those new style prop firms going down? All right, Christy, I couldn't tell you. Okay, there's so much to take a look at. Okay, there's 9,495 as of yesterday. We looked at numbers yesterday. 9,495 different companies to choose from in the stock market. I only look at those that have 20 years. Christ and Jesus, thank you for that. Hi over here on Instagram. We get more followers. We're getting there. Getting there, you guys, getting there. Okay, heard of Joby? Yeah. Any thoughts, Daniel? No. Okay, Joby's probably another ETF. SPY, for example. Yeah, no. SPY doesn't pay dividends. Okay, dividend investing for weekly cash flow. Should give you a clue. Dividend investing. SPY doesn't have dividends. Okay, Joby, J-O-B-I, J-O-B-I. Okay. No options. You guys consider yourself lucky that I have wonderful patience. Okay, because it's a very simple rule. Dividend stocks only. Dividend stocks only. Weekly options. Dividend stocks only, weekly options. Preferably dividend stocks with more. Yeah, thanks for that, Jason. More than 20 years of increased dividends. David, for your strategy, how much money do you need? My grandson started out with $50. You can start with almost anything. The consistency. You spelled it wrong. J-O-B-Y. J-O-B-Y. Okay, Joby Aviation. Okay. $4. I can almost guarantee a $4 stock does not have 20 years of increased dividends. EPD. EPD. Okay, check this out. JOBY. Historical data. Heinz and Green Day. She's not here. You have to wait for her to come in the room, Wade. You gotta wait for her to come in the room to say that. Because she hates it. Dividends only for Joby. Oh, why do you think I said Joby's a no? No dividends. Why am I looking at it? Why is like 161 people here? Why are you wasting 161 people's time with something you knew didn't have dividends, yet you put it up there anyway? Coca-Cola is great, wonderful. However, the premiums are terrible. Okay, GPMT. Mike, GPMT. GPMT. Oops. GPMT. Oh, God, mortgage trust, really? Did you like how excited I was on that one? Okay, a couple things I don't like about GPMT. Number one, they've only been paying dividends since 2017. Yeah, Jose, you think that's funny? Starbucks, we haven't gotten Starbucks yet. Okay, look at GPMT. Okay, 32 cents, 38, 40, 42, 20, 45, 25, 20, 15. Why would I invest in a stock that's decreasing their dividends? Really? Come on, guys. I'm assuming you guys are all intelligent enough to know if a company has dividends, number one, whether or not they're increasing their dividends, number two, number three, whether or not they have options available. It's really not that difficult of a question, okay? Weekly options, dividends with at least 20 years of increased dividends, okay? There's a whole bunch of them. Okay, do a little bit of research. If you guys were investing in some of the crap you threw up on me here, I can't feel bad for you. I really can't. CVX we looked at. Mickey D's was a no. Abbott Labs was a no. Home Depot, I have a good feeling it's a no. Don't get me wrong. I love Home Depot. I do. Okay. HD. 363. The 365s. Ooh. Okay, so LEP. Really? LEP? Have you looked at it yourself? Okay, slip 683. Have you looked at LEP yourself? LEP, IBM. I got the IBM. What about Ford? Mike, I actually bought some Ford this week. Okay, so Home Depot. Let's take a gander at it because the numbers work. Let's take a look at the chart. What's up with the chart? Fast, F-A-S-T. F-A-S-T. All right, get it kind of with the questions. We had too many. General Electric be one of them. Yes, GE is one of them. I'm new to this, very new. All right, David. MPC. Intel, INTC. INTC. KHC. We'll save Heinz ketchup for when the wife comes up. She hates it. HHR. That's going to be a no. IEP. All right. Marathon, MPC. MPC. All right. Let's hold off for the questions for a while, or do I have to shut them off again? We're looking at Home Depot. A year ago today, Home Depot was at $296. Now, I don't do stocks over 300 bucks. All right, so I'm going to just go through this one. Icahn Enterprises. Yeah, that's a no. At the bottom of the year, the end of October at 275. Okay, end of October. Now, the last 90 days ago today, we were at the bottom of the 90-day time frame. That was 337.82. Hey, Joel, thanks for that. Now, from there, look at the escalation in the last 90 days. The last 90 days are at the 90-day bottom. Look what the 90-day top is. 2 weeks ago. Okay, so the 90-day top was 2 weeks ago, and that was 396.87. Okay, now let's take a look at the last 30 days right there. 30 days ago today, we were opened up at 380 over here. Profit taken up, profit taken up, profit taken, a little bit up, and profit taken again. Okay, this is going to be a no because you have 1, 2, 3 days to the downside. Okay, you see them? One, that was Thursday, Monday, today. 3 days to the downside. What does that mean? That means I want it to stop, find its bottom, turn around, and move back to the upside. So Home Depot is going to be no, based on this chart. That's not even looking at the numbers, just based on the chart. 3 days to the downside. What do you think is going to happen next? It's got to find its bottom sooner or later. Okay, so Home Depot is a no. AMD is next on the list. AMD, Archer Daniels. Is that right? No, Advanced Micro Dynamics. Oh, I was wrong. Ooh, okay. 178, the 180s. Nice. I like the numbers. Do you see the numbers? 178. Okay, the 177s are going for $6. The 180s are going for $4.80. I like that. Let's take a look at the charts and see what they look like. This could be a good one. Could be a good one. All right, let's slide on over. A year ago today, we were at 96.34. Okay, way down here, 96.34. The bottom of the year was right in the beginning of May as 80.39. From there, she basically went sideways right up until the end of October. Now, from the beginning of November, she shoots up nicely to the high of the year. Now, the high of the year was 227. What website are you on? It's not a website. This is Thinkorswim. It's a trading platform from Charles Schwab. This guy never heard of AMD. Yes, I've heard of AMD, you big wiener. I'm just saying it's whatever. Anyway, the last 90 days. I just thought it was Archer Daniels, but, you know, I was wrong. All right. 90 days ago, we're at 140.54. We bottomed out, double bottom at 133.34. That was at the beginning of January. From there, she jumps up to a trading range right towards the end of January, goes all the way up until the end of February, basically just sideways. Okay, down here at the beginning of January, middle of January, she up here into this trading range, goes sideways, and then shoots up to hit the high. Let's take a look at the high. Took an L today, but the week is still young. Do you average down or sell weekly calls further out? All right, Stephen, I have no idea what you're talking about because you got to give me more to go on than that. Sorry you took a loss today. Okay, I do all my tradings on Monday. All right, so what about Mike? Pfizer, PFE? PFE, Pfizer. Okay, so the last 30 days, right? There we go. 30 days ago today, we opened up at 197.91. A week later, we topped out at 227.30. From there, it's just a couple of weeks to the down right here. Okay, towards the end of March, we hit a 30-day bottom. Then we went sideways for a little bit. Okay, the 30-day bottom was on the 25th. All right, and that was 172. Putting my calls down heavy today. Okay, Aiden. All right, so the 25th, which was last week. Wait a minute, was it last week? Yeah, Monday. Okay, last Monday was the bottom of the 30-day period. Went sideways for a little bit of pullback today, but what does the numbers look like? Historically speaking, this stock has a tendency to, what does it do? Basically goes sideways. Okay. I didn't know dividends pay weekly, Coach. Jim, dividends don't pay weekly. You're new here, so just chill, hang out. Average down is just buying more shares of a stock at a lower price to lower your adjusted basis. You know, they call it dollar cost averaging. Same thing. You adjust your basis. Same thing. All right, let's go back here. Suck this in over this way. Now, this is a question you need to ask yourself. Do I like AMD? Okay. Advanced Micro Devices, whatever. Can you explain how you make your gains, big picture? Okay, here's a good one right now. Right now we're looking AMD. Okay, I like to look at the 1-year chart, the 90-day chart, the 30-day chart, then the seasonality chart to give you an idea of how it normally moves. I'm not dividends. Can you look at Walmart? Hold on a second. Calls, Gregory. Selling calls and those collect the premium. Yeah, Jason, thank you for that. Send me $1 through Cash App, please. Yeah, that ain't gonna happen. And shorts. I don't do shorts. Sorry. Can you make a profit just holding smaller AMO? Smaller AMO for a while. Right now, market's down 5%. Okay, someone I don't know. How about IOVA? Never heard of them. Not even showing DJT. DJT. No, I don't short anything. Okay, now this trading strategy, for those of you guys that are new here, okay, this was created for my 9-year-old daughter. If you can't comprehend it, maybe you shouldn't be here. Okay, Aiden, good for you. Okay, I don't know enough about DJT, so I can't give you any information. Who bought those SPI calls with me today? Yeah, it wasn't me. Okay, so looking at AMD. Right now, the current price for AMD is 178.17. 178.70 is the last trade. 178.10 is the bid. 178.17. That gives you an indication the market maker is pushing it down tomorrow. Okay? When the bid and the ask are both lower than the last price, the market maker is going to push it down. So why would I want to jump into that? Well, I don't. Well, because it has a bottom. It's down today. So why do I want to look at it? When is a good time to buy dividend stocks? Do I have to hold the entire quarter to get a dividend? No. Yeah, for fuck's sake. Don't make it fun of me. That's his name. Need to explain overall strategy. Overall strategy is simple. You ready? Buy a good quality stock, sell an option against it, call a covered call, give somebody the option to buy it from the same price just before the EX date to catch the artificial run-up coming into the dividend play, capture a 1% premium from the covered call. Safe, secure, predictable, consistent 1% per week. I hope that's simple enough overall. After all, it was created for a 9-year-old back in 08. Oh, you know what? I always love showing this one. Hold that thought. All right, come here. Let's go to the YouTube channel, right? Back to the10minutetrade.com. Go to the YouTube channel. Say bubble. That is FireStrat. Okay, Aiden, I'm glad you appreciate it. Videos. Okay, well, let's take a look at the oldest. All right, there she is right there.
Coming in first place is Reiner, paying a big 13.7%. And we have a winner. Now let's see how they are on the calendar.
Okay. Anyway, that's the original 10-minute trader, my daughter. Okay, that was 11. That video was from 11 years ago. Market managers with multi-million-dollar struggle to beat the S&P 500, but you're claiming you make over 40%. Yeah, Matt. Just for you, Matt. You ready for this? Let's see if you can add, Matt. All right. Matt, on the screen just for you for your entertainment whatsoever. What is this? This is week number 1. 4 trades, CVS, Ford, General Motors, and Macy's. What did they make that week? Oh, 2.38%. Okay. Week number 2, 5 positions, Ford, Lowe's, Clorox, General Motors, Macy's, 1.3%. There you go. And there you have it. Week number 3, 5 positions, Ford, Lowe's, Clorox, General Motors, Macy's, 1.3%. There you go. Okay, so, do I make 1% every week? No, I don't. Look at this one. Let's go back one. Week number 3, Macy's, Ford, Capital One Finance, General Motors, Clorox, 0.85. Did I make 1% week 3? No, I didn't. Do you feel bad for me? No, you shouldn't. Week number 4, 5 positions. Macy's, General Motors, Ford, Capital One Finance, Clorox. 0.9. Nope, didn't make it. Okay, week number 4, 1.03. Week number 6, 1.06. Week number 7, 1.9. Week number 8, 2.03. Week number 9, 2.37. Week number 10, 4.6. Week number 11, 3.9. Week number, what was this, 12.9. Okay, so add it all up. So far, account number 1, right here, 21.06% since the beginning of the year. So do I make 40 or 50% per year? Yeah, I do. You don't trust me? Look at the numbers yourself. Do the math yourself. I'm not here to convince anyone. I share this only, the only reason I'm sharing this is because I have a long-term plan. My long-term plan is I plan to open up my own hedge fund. In order to get a hedge fund, I have to do what's called an incubator fund. In order to get an incubator fund, I have to show verifiable proof of trades. So I have 2 accounts here. One is a cash account, one is a margin account. Every single trade I've done so far this year is logged online. So I have independent auditors take a look at the trades. They can take a look at each and every trade. Okay, here's the time frame. January 2nd, 2024, 10:01 a.m. Okay, I sold 8 contracts at General Motors, the 3650s, collected 26 cents a share, blah, 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 whatever it was, made a grand total of 2.12%. The math is there. You can't figure it out. It's not my problem. I'm not going to prove anything to anyone. I prefer that you don't listen to me. Do your own homework. Does it make sense? This right here. If I buy AMD tomorrow morning, 178.17. I sell somebody the right to buy it from me at 180. Okay, that's $2 more than I paid for it. I can collect $4.80 per share. LA Sound, how's it going? $4.80 per share. I don't make up these numbers. These aren't mine. This is Thinkorswim, which is owned by Charles Schwab. Okay, it used to be TD Ameritrade, but TD Ameritrade got bought out by Charles Schwab. So, last trade, bid, ask, volume, open, high, low. You can go to any financial website and those numbers will be there. I didn't make them up. But I can buy it for tomorrow morning, 178.17. Okay, the 180 is going for $4.80. Again, I didn't make up that number. For the fun of it, let's whip out the calculator. Whip that calculator out, baby. $4.80 per share. Purchase price divided by 178.17. That comes to a grand total of 2.6%. So how can you possibly tell me I can't do 30% a year if I can do 2.6% on one trade right here in front of you for this week? I buy it tomorrow morning, sell somebody the right, covered call to buy it from me for more than I paid for it, get $4.80 per share, which comes to a grand total of, if my math is correct, the old trusty calculator, 2.69% for the week. Okay? I can't help you out, you know? Recommend documentation in your control process and keep track of updates documentation process. Yeah, Henry, I got that. That's why I publish them online. Okay, the process is to prove that I can do it, number one. The second step of the process is doing what is called an incubator fund. An incubator fund is the fund you do before you do a hedge fund. Okay, because once the incubator fund is what is a covered call? Oh my goodness. A covered call is kind of like having a car in your driveway. You want $1,000 for it. Great. Tony comes by and says, hey, I'll give you $1,000. Let me give you $100 right now. I'll come pick it up on Friday. He comes on Friday, picks it up, gives you $1,000. He doesn't come back on Friday. You keep the $100. You sell to someone else on next week. Same thing. You buy the stock. This one in particular we're talking about, 178. Okay, 178.17. Right? A covered call is kind of like layaway. You buy the stock, 178.17. You sell somebody the right to buy it from you using a covered call. It's a right, not an obligation. AMD is going to hit 173. Okay, I have no idea. Because covered calls work until they lose big. They don't really lose big. Matt, I'm going to refer you back to rule number 1. Never buy something you do not want to hold long term. Matt, if you do not like AMD, don't buy it. That's rule number one. I can't help you if you can't follow rules. Rule number one, never buy something you do not plan to hold for a long period of time. Tilray is a covered call money printer. I have no idea what Tilray is. I like cash secured puts first. Okay, the wheel strategy. Nothing wrong with cash secured puts. It's a good strategy. However, House of Cards, this strategy that I'm sharing with you for free, no holds barred, no catches whatsoever, was created for my 9-year-old daughter. It had to be simple. The wheel is not simple. Okay, you're adding 2 extra steps. The wheel is 2 extra steps as to what this is, and it's basically the exact same thing. You cannot do a cash secured put without putting money out front. Basically the exact same thing. Stocks, you put cash up front, you're buying the stock, selling some on the right. We had a good year this spot. Yeah, can you make money in stock market crashes? Well, Mike goes back to that rule number one. Never buy something you don't want to hold on to a long time. Tilray 2C foil call printing. Yeah, Aiden, I have no idea what that means. Really don't. And I appreciate your enthusiasm in sharing your information. IVR has dividend 40 cents on Friday. I have no idea who IVR is. Anyway, so as I was saying, this is AMD, okay, Advanced Micro Devices. Okay, if you like advanced micro devices, it's a possibility. However, do your own research, do your own digging. Ask the question, do I like AMD? If I buy it, do I mind holding it for a long period of time if it goes down? Because stocks only do 2 things. And if you think they do other than 2 things, you're sadly mistaken. Stock will not come and wash your dishes. It will not trim your hedges. It will not mow your lawn. It will not leave candies on your pillow at night. Stocks go up, stocks go down. That's all they do. Okay? How you buy them, how you sell them, that's totally up to you. Tilray doesn't pay dividends, so why the hell are we looking at Tilray? I don't know. Tilray's not on my list. Sideways. Yeah. They don't go sideways. They go up, they go down. It looks like they go sideways, but they do. They go up, they go down. What time do you do live each night? 9 p.m. Great job. You had 90 minutes so far. AMD doesn't pay dividends. Then why the hell are we looking at it? QSR. What about T? Mike, where you looked at T? David Call. So how do we get together and pull a Robinhood? I actually like Robinhood. I do. I use that option. I use that trading platform. Okay, so AMD doesn't pay dividends. So why the hell are we looking at it? They split both ways. Some pay dividends. Okay, I'm a little lost there. All right, so let's look at the next one. Next one on the list, VYM. Hey, DK, we already looked at AT&T. VYM. Okay, so V is in victory. VYM. Vanguard ETF. Now, didn't I ask you guys not to throw ETFs at me? Okay, now, just to let you know, Vanguard ETF, I did take the stocks out of that. RIG. Ooh, wait a minute. I looked at RIG once. RIG. We'll take a look at it. All right, Tony. We'll take a look at it. It's like I get all these to go through. Okay, this is what you guys give me every night. Okay, Aiden, your calls are down 60%. I can't help you out with that, dude. Robinhood pay 5.1%. Yeah, whatever. Let me go back. Robin pays 5.2% on your cash balance. Yeah, Mike. Unless they're paying it monthly, I'm not interested. You said they only do 2 things, kind of 2-dimensional viewing. All right, Marshall, let me ask you a question. I love it when people, okay. Okay. What is it doing? Okay. It goes up, it goes down. It goes up, it goes down. What do you think about max loss on a covered call? All right, Matt, I'm going to refer you back to rule number 1. If you think a stock's going to go down, don't buy it. You never buy something you do not want to own for a long period of time. That is pretty plain and simple. Mike, does every money market account? Okay. How about ECC? I've never heard of ECC. DC. No options. Okay, so it boggles my mind why you guys don't understand that. Okay, 20 years of increased dividends, weekly options. Those are the two things I asked for you guys. Two. However you want to look at the two things: weekly options and 20 years of increased dividends. Okay, this is what you guys give me on a daily basis. Okay, this list here, this list here, this list here, this list here. Look at what I have circled over here. 1, 2, 3, 4, 5, 6, 7, 8. Out of all of these, okay, only 8 of them are halfway decent. All right. Anyway, what's next? VYM is a no. LVS is on my list. Elvis is in the building. LVS. Las Vegas Sands. Interesting. 53 to 52. Ooh, okay. LMT. Lockheed Martin. LMT. All right, so let's take an LVS, okay? The Sands in Vegas. 53 is the ask price. Look at the 53. $1. That's over 1%. So let's take a look at the chart and see what that says. First thing I want to see when I take a look at the chart, where's the high? Where's the low? Where was it a year ago? Where is it now? Isn't that the only margin, though? No. No, that's not a margin at all. TSLY, yeah, that's no. Okay, slip 683. Okay, TSLY is a no. We're taking a look at LVS. Elvis. All right. A year ago today, Elvis was 59.43. The high of the year is 65.58. A year ago, high of the year, she drops down here at the bottom, and she goes back up again. Okay, great. Okay, now, I don't know about any of you, but it goes down, it goes up. It goes down, it goes up. It goes down, it's go up. I haven't seen a single one go sideways yet. Okay, not a single one going sideways. Because I can get a third grader say, that's up, that's down, that's sideways. You can't tell me that's up, down, up, down, up, down. There's no sideways there. I was answering Matt in the comments. All right. Do you max out your margin account since you can make so much return? If not, why? Okay, Matt, I got 5 different accounts. 5. I share 2 of them with you guys. That's it, 2. Okay, Mike, bank stocks, yes. I do Bank of America, I do Wells Fargo, I do Capital One Finance, and I do Citibank. Okay, Visa, MasterCard also, and Discover. So why are we looking for sideways? Because some boneheads say stocks don't go up and down, they go sideways. You know, that's it. Stocks do 2 things only. They go up, they go down. They go up, they go down. None of this sideways crap. All right, so let's look at the chart. That's lithium stocks. Hey, cow, I don't do it that way. All right, so high of the year, low of the year. Where was it a year ago? Where is it now? All right, so I kind of look at, I like the 1-year chart. Okay, Jose, we're going to get Starbucks. Where the heck is Starbucks? Listen. I swear I put Starbucks down. I'm looking at the list. Okay, we'll look at Starbucks next. All right, so the bottom of the year was at the beginning of October, and that was 43.86. Okay, last 90 days. 90 days ago today, 48.91. The bottom of the 90-day period was 47.51. The high of the 90-day period was 55.66. Okay? Now, from there, profit taken up, down, up, down, up, down. I haven't seen one go sideways yet. Really haven't. Okay, the closest I've ever seen to a sideways is right here. We call it a doji, where it opens and closes the same. That could be sideways. I don't know, but she did go up and she did go down. She did. All right, last 30 days. Key. Okay, slip 86, 683. Key. We'll take a look at Key. K-E-Y. We'll take a gander at it. Hold tight. All right, so 30 days ago, we opened up at 53.40. Okay, drop down, shot back up again, drop down to 30-day bottom on the 22nd, and that was 2 weeks ago. Why not max out margin account with strategy and make more? Also take out as many loans as possible. Matt, that's exactly what I do. However, I don't share that information here. Here, interest is high. Yeah, I'll tell you what. I'll give you 20% interest. I'll borrow as much money as you'll loan me. Okay, so if you are in for the dividends, why do you need to look at the chart? It's not like we'll be selling. We will. Victory. Okay, pay attention. It's really not that difficult to grasp. Okay, my 9-year-old grasped it. Not that. Didn't take her long at all. Okay, maybe because she's 9, she doesn't have all that crap in her head like we adults do. Okay, it's the high, but 1 year making 40% a year. Okay, no, I make more than 40% a year. Okay, however, let's finish taking a look at the numbers. Okay, so the bottom is at 322. Okay, the high is here, the bottom is here. We shoot up, we pull back one day. All right, so we'll pull them back. 1, 2, 3, 4, 5 days to the upside, 1 day to pull back. Yeah, so I'm going to wait for it to settle to find a better turn. Okay, what do I mean by that? Okay, VRP. VVRP. Never heard of that. VVRP. I like the numbers, but I don't like the chart. Okay, 1, 2, 3, 4, 5 days to the upside. Today was not an up day. Okay, this right here is profit from the bottom to the top. There's profit to be taken there. So they started on that today. Maybe they can do it again tomorrow. When they're finished taking profit, it'll settle down at the bottom and it'll turn around and go back up. Okay, at this moment, this one's a no. No to Elvis. General Motors. Yeah. Now, I like GM for several reasons. All right, GM is going to be a no. Okay, reason being, look at that run up. Okay, that's way too much run up. Only 1 day to pull back. That's going to be more pullback on General Motors. So General Motors is a no. Okay, Matt, my personal finances run none of your damn business. Personally. Okay, I'm comfortable. I have no need to be a billionaire. I had a lot of money, and there's nothing but problems. Everybody wants something from you. So, yeah, I'm perfectly happy where I am. Ooh, AGNC is a good one. No, Tesla. No, I don't like Tesla. Tesla does not pay dividends. AGNC. AGNC. I saw Jacqueline stop in and say hi. Hi, Miss Jacqueline. XOM. We already looked at XOM, didn't we? Didn't we look at XOM already? Yeah, we looked at Starbucks already. We looked at XOM. ALB, Albemarle. ALB. Okay, now Albemarle, I did buy some of that this week, so we're going to take a good look at that one. Ooh, I like that one. All right, so let's take a look at Albemarle. Your thoughts on energy stocks? Emmett, I don't really do that. Disney only pays once a year. Makes sense, okay? Yeah. RX. Never heard of that, Don. AGNC. We're doing AGNC. Okay, look, check a look. You guys throw all these stocks at me and I write them down. So as they pop up, I write them down. Right at this moment in time, we are looking at Albemarle, ALB. Apple, put Apple on the list. AAPL. Okay, we got an hour and 15 minutes left. All right, so we're not going to get to the rest of them. So guys, stop suggesting them for the amount that I have to look at. I'm not going to get to them, whatever. Are you retired? Sarah, yes, I am. IVR is down 2 days, but the sell, buy higher, last. Ever buy back if a stock gets smashed at 2 cents or 3 and hope to sell again the same week if it goes up? Yeah, every once in a while, but I don't do that anymore. Okay, coin, yeah, I don't do cryptocurrency, so coin is no. Right now we're looking at Albemarle, so let's try to stay focused. No, I don't sell puts. Sorry. All right, a year ago we did that. We did that. Last 90 days. Albemarle, last 90 days. Look at that. 90 days ago today, we're at the 90-day high. She drops down. Look at that profit taking. Whoa. Bounces up, comes back down, bounces up, down, up, down, up, down. Yep, up, down. So what do you do? Okay, Mr. Habib. Habibi? All right. All right, truth, trust the system. No, 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 and no. All of those are no's. Those are all ETFs. Now, 186. If it is so certain, max out all possible loans and max margins. Yeah, Matt, I kind of agree with you. Kind of. All right, so the last 30 days. Here we go. 30 days ago today. Look at that 30-day high. Remember I told you if you don't take your profits, the market maker will take it away from you. Look at this. Down, gap down, all the way down. So you're at the 30-day high. 2 days later, you're at the 30-day bottom. Okay. From there, she jumps up, goes sideways for a couple of weeks, comes up, pulls back. Now, that right there, okay, sideways, pull back, up. This is what got me in on this trade. 30-day highs over here, 30-day bottoms here, going sideways, 3 days to the upside, so we jumped it on Monday. Okay, just so happened Monday and Tuesday, down days. I'm already into it, so it is what it is. All right, so let's take a look at the numbers. Historically speaking, what does this stock normally do? Okay, look at it, it's all over the place. Okay, the blue represents this year, the red represents 10 years worth of data, all over the place. Okay, but what's it going to do in the next couple of weeks? Right there, she's going to dip a little bit and then go up a little bit. Alejandro, ¿qué pasa, amigo? ¿Cómo está? Matt Johnson, interesting. What about Chord Energy? Never heard of it. Okay, if I never heard of it, then it's probably not going to work. Hello. All right, so going to go sideways. A little bit of a dip. Do I mind? Not really, because I'm already into it. Okay, now I bought Albemarle this week, didn't I? ALB, right there. Yeah, 131, and I sold the 131. It's got $3, over 2%. I'm okay with that. Now, Albemarle, I could buy it tomorrow morning, 126.95. I can sell off the 127s for 380. Okay, so here's the question. Yeah, Jay, AG&C is on the list, dude. Okay, I do them as they come in. AG&C is on the list. I just haven't got to it yet. UFPT looking good. Yeah, on Andrew, never heard of it. UFPT. Okay, so as I'm saying, Albemarle, 126.95. The 127 is going for 380. So what does that mean? What does 380 mean? Okay, $3.80. Clear this. $3.80. The purchase price is 126. 126.95. That comes to a grand total of 2.99. Okay, 2.99% for the week. But here's the thing. Do you like Albemarle? Remember rule number 1? Do you like weekly or monthly dividends? Well, Michael, okay, there aren't weekly dividends. We're doing option trading. Okay, we use the dividend as a fallback, kind of like a cherry on top. All right, so I jump in 2 weeks before the dividend, grab the 1%, get on out. If I have to take it into the dividend, I'll collect it. Never sold a call. Does the premium just go into your sweep account? Yes, it does. What about ATGFF? Never heard of it. Matt Vick, making 40% on this secret strategy. Yeah, if true, go 150 miles an hour and tell nobody. Well, Matt, I've been doing. Hey, Matt, here's a good one for you. Ready? Hold on a second. And I think I already showed this to you. Yeah, this is me doing it 11 years ago. Oh, look at this. Here's me again. 11 years ago.
Taught her how to do some trading. And I had a couple of challenges there because she was only 9. First of all, it had to be easy for her to understand. It had to be easy for her to implement. And it had to be profitable. And it had to have like almost no risk. So it took me a while.
That was 11 years ago. I'm saying the exact same thing now. That video on YouTube was put up 11 years ago. Okay, so the information's out there. You're just finding it now because it's on TikTok. If you're making so much, why do you bother talking to us, telling us a strategy? Matt, I'm assuming, Matt, you're not retired, okay? Because at some point in your life, okay, I have kids and I have grandkids. At some point in your life, money has less meaning, okay? It's more about time with family, time doing what you want to do. I like watching the grass grow. I got plants over here, okay? I got onion plants, tomato plants. I even planted apple trees from a seed, and I actually enjoy watching them grow, okay? So at some point in your life, you feel compelled to share what you have learned, and that's what I'm doing here. I'm sharing what I've learned. You aged in the last years. Yeah, Mike, thank you. You're very sweet. Where's my delete button? Hey, we all aged in the last 11 years. Dave Cantrell. So I'm thinking it's a brokerage account. No, I have 5 different accounts. James, please stop entertaining Matt. He's dragging down the whole lot. Yeah, 86, I get that. Apple trees from seeds won't work. Well, Michael, I hate to differ with you. I cut an apple open, and all of a sudden I saw a bunch of seeds that were sprouted. I put them in dirt. Now they're about yay big. Okay? Whether or not they work or not, they're growing. Hey, I'm talking about Charles Schwab website. Yes, that is Charles Schwab. Yeah. Let's get out of here. You guys don't want to see that. You guys want to see something funny? Watch this. This one's funny. Talking about trying to entertain a 9-year-old.
Hi, I'm JC, and as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. You a Trigo.
There's over 20 days in the month of January. 21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Every single day there is a different company paying out dividends. Yay! Anyway, no. Seriously.
I had entertained an 11-year. She was 11 at that time. But yeah, that was how long ago? 11 years ago. Okay? Okay, so I've been doing this for quite a while. You're just finding it now. I can't help you out with that. Am I keeping it secret? No, I've been sharing it for quite a while. I don't like what I have to pay in taxes on dividends. Oh, Mike, you need to talk to a tax strategist. There's a reason why Donald Trump does pay taxes. There's a reason why Warren Buffett pays less taxes than his secretary does. Do you run your account via entities? Yes, I do. The coach tells the whole story. I'm broke. Your secret is reversed. No, your screen is reversed, so I can't read the names of the videos, the channels. Well, I told you that this screen here is live, live on YouTube. Okay, get off your phone, go onto your computer. Okay, it's on the computer at the10minutetrade.com on YouTube. Okay, the link is right in the bio. All the links are up there. Trade your Roth IRA to avoid taxes. Yeah, but if you honestly believe that Roth IRA taxes are not going to figure a way to tax you and screw you in the long run, yeah. How old's your daughter now? She's 25. She's going to be 25 this year. Don't get any ideas. Okay, so Able model. So you have to ask yourself a question. Do I like Able model? Rule number 1, never buy something you do not want to hold for a long period of time. Rule number 2, make sure it has 20 years. Oh, never sell at a loss. Rule number 3, make sure it has 20 years of increased dividends. Rule number 4, weekly options. And does she still trade? No, she does not. Okay, my 3 children have no interest in money at all. My son's a bartender, my other son's a cook, my daughter washes dogs. She washes dogs. Okay? So, money does not interest any of them. Okay, EPD is next. EPD 148, yep. Right. EPD. LA Sound, I'm at 131. Oh, 131. So basically, you buy the stock, sell the at the money covered, call, hope for phone price. Exactly, Habib. First person who got it tonight. Love it, sir. Way to go. For fuck's sake, are you adopting? No, you wouldn't want to be adopted by me. Trading a switch is coming. People haven't a clue, but they will when the banks freeze accounts. Interesting. Love it. Thank you for showing us. Not a problem. Okay, I'm going to say no to EPD. Okay, I'm not even going to look at the numbers. Just look at this chart. Okay, from here, straight up. It's great if you want to buy it and hold it, but I wouldn't buy it at the top. Okay, you're standing on a ladder reaching for the sky. Adopt him and make a wash. Make him wash. Yeah, that's funny. Yeah. Habibi figured it out quick. Mike, I am doing stock trading and real estate investing. My real estate profits are twice as it's on stock. Mike, that's cool. Okay, but I can almost guarantee you, Mike, I can almost guarantee you with 100% certainty, I did real estate for years. Really did. Okay? All the equity you have sitting in your house, you cannot take that equity and go buy yourself a cup of coffee. You can't. Somebody mentioned TLR, blah, blah, blah. Low power over here. How can that be low power? That was charging all day. Someone mentioned TLR doesn't meet your rules. However, it's a perfect covered call. Just looked. All right, Jonathan, if it doesn't have weekly options and increased dividends, then it's not on the list. Okay, there's a lot of stocks out there that have great setups and great for covered calls. There are, but what's the downside? That's the important question. What's the downside? Because if you think things are going to consistently go like this for the rest of our lives, you're crazy, because it's just not going to do it. There's going to be pullback. There's going to be recession. There's going to be economic crashes, all that crap. And when it goes down, what are you going to do then? The only reason I do dividend stocks that increase their dividends consistently is when it happens. Not if it happens, it's when it happens. What do you do if the price goes above your ATM call you sold? Well, you get out and then you're back into cash on Monday. Let's take a look at this one, for instance. If I buy it at 31, sell someone the right to buy it at 31, and it goes above 31 come Friday, that person will buy that stock from me at 31 because that was a contract that was agreed upon. What state do I live in? I don't. I'm a snowbird. I go wherever the weather's good. Right now I'm in the Boston area. Okay, but wherever the weather's good is where I'm at. Okay, so what was I saying? Oh, so answer the question. What happens if the stock goes up? Well, if I buy it at 31 in the morning, I sell somebody the rights to buy it from me at 31, and they pay me 1% or more. Great. Now, if it goes above 31, they will buy that stock over the weekend, and come Monday, I'll be back into all cash again, and I do it the same. Do it again. Okay, it's just a rotating, revolving, over and over again, same things over and over again. Explain the strategy. You buy a good quality stock, sell someone the right to buy it from you, buy a covered call, collect 1% premium per week, rinse and repeat. There you go. In a nutshell. All right, next on the list, MU. Someone came up with MU. MU. I don't know it. Micron Technology. All right, that's going to be another no. See the chart? Another no. Okay, way too much profit potential waiting to be taken. Yeah, 186. You got that one? Okay, look at that. Okay, you got a big gap up here. Okay, up, over, up. Yeah, it's profit. Look at this. Too much profit. Look at this gap up. Gaps have a tendency to fill. That baby's going to fill eventually. When do you bail out of the stock if it keeps going down? I flip and fix. I don't. Okay, I carried Target last year for 6 months. I carried hold on, 3 stocks I lost on last year. Okay, PPG, Target, and Kimberly-Clark. Kimberly-Clark I took for 9 months, as long as I've ever held on to anything. Stupid question, but what is a covered call? But with a covered call, do you have to own 100 shares, or do you put it margin? Okay, now Matt, I apologize if I didn't say that ahead of time. My assumption is just what Winner 86 has told you. 100 shares of stock equals 1 contract. 200 shares, 2 contracts. 500 shares, 5 contracts, so on and so forth. Yeah, not sure what having a dividend has to do with that. Well, Tyler, the dividend is your share of the profits. Now, I almost guarantee not many of you know this, okay? In 1602, you get a bunch of these guys get together and say, hey, let's build this company, let's do this, blah, blah, blah. Okay, so what they did is they went door to door, knocking, knock, knock, hey, you want to invest in this company? Promise we'll share the profits with a dividend. That company was the VOC, Dutch East India Shipping Company. They actually went door to door selling shares of the company, and they promised to share with the dividends portion of the profits. Okay, they averaged 18% for 198 years before they went bankrupt. Yeah, the dividends like the cherry on top. Yep, exactly right. But the share of the price gets reduced by the amount of the dividend. Yeah, Mr. Habibi, that's correct. Now, that is, all right, so let me pull up the calendar. Let me put in something simple. All right. I'm going to pick up something else. Hold on. There we go, Procter & Gamble. All right. Do this right here, Mr. Habibi. All right. Procter & Gamble. This is their dividend date right here. Okay. To capture the dividend, to get the dividend, you have to buy it on or before this date. Okay. This is the 20th, 19th, 18th, 17th, 14th, 13th. Anytime before this date right here, if you buy the stock, you get the dividend. The very next day, the stock has a tendency to go down after the dividend. Like what you sell, covered call on Tesla. Tesla doesn't have dividends. But why do you have to do a dividend-paying stock? Follows the strategy. Okay, so here's the thing. The dividend is here on the 20th. If I buy it on the 3rd, which is a Monday, okay, if I buy Procter & Gamble on Monday, sell somebody the right to buy it from me. Let's actually do one, okay? Let's do a different one because that's not even here yet. That's the 20th, which is not going to work. Let's go to March. In March. Okay, let's go back 1 year and March. Here we go. Hewlett Packard. Let's take a quick look at Hewlett Packard for a second so we see if you understand this. Okay. Are you ready for this? Mike, is there any stocks that pay dividends monthly? Yes, there are a bunch. Okay. Hewlett Packard. We all know who Hewlett Packard is, right? Hewlett Packard is paying 27 cents on the 12th of March, correct? Okay, so hypothetically speaking, is what it is. All right, anyway, purchase price is $29.82. The closest strike price is going to be the 30. All right, so if they're paying their dividend on the 12th, right, 10 days prior to, 2 weeks, okay, not this week, this is 1 week, 2 weeks. If I buy it on the 26th, sell somebody the rights to buy it from me for the exact same price I just paid for it. So if I paid $29 for it, right? I sell somebody the right to buy it from me at 29 bucks, which I just paid 29 bucks. So if I buy it for $29 on a Monday, okay, which is the 26th, if I buy it on Monday for 26 bucks, I sell someone the right to buy it from me for $26 between when I bought it Monday, I sell the covered call, sell the call option. Okay, they pay me a premium, and that is good for Monday, and it expires on Friday. If the stock is above what I sold the strike price, they will buy it from me, and then come Monday, I'll be back into all cash again, and I'll get to do it on another company. If not, I will sell the covered call again, okay, and it will expire on Friday. So premium, and then I go into week number 3, do the exact same thing again. But week number 3, I'll collect another premium and the dividend, and hopefully by Friday, I'll be called out. So I buy on Mondays, 2 weeks before the EX date. All right. I sell someone the rights, basically the rights. If I buy it for 12 bucks, I want someone to buy it from me for 12 bucks. Okay. They will pay me a premium. That premium has got to be 1% or more. If it's not, I don't want to do it. Okay. Very rarely do I do less than 1% on a weekly basis. Okay. You don't believe me? The numbers are right here. Where are they? Right there. Okay. The numbers are right there. Check them all out. 2.3%, 5%, 2.5%, 2.03, 1.9, 3.7. The numbers are all right there. Okay. Every week I will trade, and I will do the same thing week after week after week, looking for those stocks that pay me 1% per week. Okay. Now, if I don't hit my target by Friday, I will bring it into this week, and I'll do the exact same thing. If I don't hit my target week number 2, I'll bring it into week number 3, do the exact same thing. But in week number 3, I will collect a premium and the dividend. So I get premium, dividend. Okay? Did I hear you say you're achieving 30? No, you didn't hear that, House of Cards. Okay, account number 1 this year is 20%, 21%. Account number 2 is 40% already for the first quarter. Okay. Now, that's not guaranteed. I did not do that last year. Last year, I had 3 major losers. Okay, I think I did like 45 or 50% last year. I think it was 40% last year. Nice, yeah. But it's, 10, 15, 20 minutes a day. Okay, now, it takes me a little longer nowadays because I have a bunch of people that follow me and I answer a bunch of questions in the morning. Okay, but if it wasn't for all those people, yeah, it takes me 10 minutes. That's where the 10-minute trader came from, because it takes less than 10 minutes. So you always start about 2 weeks. 2 weeks before the dividend. The dividend's the 12th, right here, okay? 1 week, 2 weeks, on a Monday. I buy on a Monday, I get the highest rate of return on a Monday, because you have 1, 2, 3, 4, 5 days of time premium. So basically, I'm selling time. So I'm giving somebody the right to buy it from me, from the exact price I paid for it, between when I sell the option and to when the option expires, which Monday through Friday. If it doesn't hit my target on Friday, I do it again Monday. Okay, if it doesn't hit my target there, I do it again on Monday. If it doesn't hit my target here, I do it again on Monday. And I keep doing it until it finally hits my target. Now, last year, I did Kimberly-Clark for 9 months. I collected 3 dividends and 20-some-odd premiums. But if your stock gets called before the EX date, you won't get a dividend. Okay, Smelly Bella, I really don't care about the dividend. The dividend just tells me when to buy it. That's all the dividend tells me. When do I buy it? Okay, dividend here, 2 weeks out. That's all the dividend tells me. Okay, if I get my 1% this week, I won't buy it again until another 90 days, because this right here, HPQ Compact, Hewlett Packard, pays every 90 days. So March 2024, that is week number 13, 12, 11, week number 11. There's 13 weeks in a quarter. Hewlett Packard pays on week number 11. Okay, right now, we're in week number 1 of the second quarter. What does it mean to hit my target? All right, if I buy it for $1, my target at the end of the week is $1. So if I buy it for $1, I want to sell it for $1. In this case, if I buy it for 29 bucks, I want to sell it for 29 bucks. That's my target. If it's at 28.98, I didn't hit my target. If it's at 28.99, I didn't hit my target. If it's at 29.04, I did hit my target. Okay, so I buy it. In this instance right here, what the hell is it? 29.56. He's playing the dividend run-ups. Exactly, Jonathan. Second person who got it. Dividend is nice, but not necessarily to get 1%. Yep, you're absolutely right. He's making 1% on the premium. Right again. Okay, so we are at 11:09, which means we got 21 minutes left. Okay, I'm done at 11:30. You know, from 9 to 11:30, that's 2.5 hours. I think that's plenty of time. Next one on the list. MU already did. That was a no. Just agreed. It's not hard. No, it's not hard. You guys are going to remember. Okay, you guys make it more difficult than it needs to be. This was created for a 9-year-old girl. You don't believe me? Here she is right here. Whoops. Okay, that's me.
List number 3 is a list of stocks that pay out every month. And the 4th list is lists of stocks that pay out every 4 times a week. Yeah. The lists I'm going to send you is going to help you get the best return on your money. Wait, you just realized something. If they are 20 days exactly in this year of... They're 20 days exactly in this year of January of the trading days. And if you only have to own stock for about 2 or 3 days...
20 days in the month of January. 20 days in February. By picking just one company per month. Just one. January, February, March, that's 12. 12. You can buy 12 different companies for the whole year and still make over 20% a year. That is easy. 1 trade a month. Who can't do 1 trade a month? But if you want to bump it up a little bit, let's do 2 trades a month. 20 days. 20 days in the month of January, you can do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year. And if you get at least 2%, that's close to 50% a year. 50% per year. That's cool. And this is James.
It's kind of funny watching these old videos. Where can I follow the trades? Well, let's go back to here. Okay, up here in the bio, right there. Okay, you click on the link, slap me in the face, right there. There's my pictures right up there. Hit that and go to the10minutetrader.com. Here it is, the10minutetrader.com. Okay, video number 1 gives you the 3 simple steps to 1% per week. Video number 2, no risk trading explained. Right there, live trading. That will take you to my Patreon page. Okay, the Patreon page is where you actually sign up to be on our trading on a daily basis. Monday, Tuesday, Wednesday, Thursday, 9:15 to 10:15. It's about an hour. On Friday, we jump in at 3:30. Why 3:30? Because we have a lot of us to take a look at all of our positions. Because on Friday, the options expire. When do they expire? They expire at 4 p.m. Well, they don't expire until Saturday, but you can't do anything until 4 p.m. That's the last you can do. So we jump in at 3:30. We take a look at all our positions. Okay, so I bought stuff on Monday, and Tuesday, Wednesday, Thursday. I'll just take a look at it, see what it's doing, and get kind of a mental picture of what I'm going to do on Friday. Because as a great John F. Kennedy would say, you can't answer the questions of Friday afternoon when it's Tuesday. You can't do it. Can't answer the questions of tomorrow with the knowledge we possess today. That's what he said. We cannot answer the questions of tomorrow with the knowledge we possess today. John F. Kennedy said that a long time ago. And it's true. I can't tell you what I'm going to do on Friday until we get to Friday. James, how do you roll over your option the next week? Ellie Soundwave, now 30-something in wisdom of a very wise man. Now 30-something. Okay, Rooster, where you go? Rooster, I'm 60. I wish I was 30. I remember 30. 30 was fun. I had so fun when I was 30. Anyway, besides the point. Let's get back to where we were. We got 15 minutes left. All right, let's look at a couple of good trades in the next 15 minutes. All right. IEP. Who suggested IEP? Yes. Okay. IEP. What is IEP? Icon Enterprises. Righty. 17. 17. Ooh. Okay. Let's look at ICANN. Okay. Now, the price, $17. The $17 is going for 30 cents. Okay. What is 17? That's no, not. It's like 1.5%. I think you're still having fun. Way to go. Fun way to go. And thanks for your help. Hey, Rooster, way to go. Dividend was cut in half. IEP? Was it really? IEP. Now, this is Yahoo Finance. I love Yahoo Finance. You get a lot of information about everything. Okay, historical data. Okay, here we go. Icon Enterprises. Max dividends. Wow. Yeah, they're all over the place. Okay, so they've been paying dividends since 1988. Okay, fine. 49, but look at this. Consistent, 49, 49. They cut it in half to 24, cut it in half again to 12, cut it down again to 10, then pumped it to 15, to 24, to 24, 49, then to 10, then to $1, $1.25, $1.50, $1.75 to $2, and it's been $2 for a while, and then cut it again. Okay, so here's the question you need to ask yourself with ICANN, IEP. Okay? Their dividends are not consistent. They're not consistent with their dividends. So, are you okay with that? Because I don't ever tell people what to do. I don't. I just look at the numbers, I look at the charts. Yeah, I read the numbers, read the chart, give you my opinion, what I would do. I never tell anyone what to do. Okay, so at 17, it's at 30 cents. Okay, look where it was. A year ago, we're at 52.28. Big drop. Kept on going. The bottom of the year was mid-December at 14.84. So here's an interesting question for you. From 52 to 14.84. That's a big-ass drop. Okay, that's more than, how much is that? Oh, okay, one quick question. Clear 1584 divided by 52. Whoops. All right, 1584. Okay. I want to divide that by, what was it again? 52. It's a 30% drop. Wait a minute. No, it's a 70% drop. That's freaking nuts. Okay, so the high of the year, 53.09. The bottom of the year, 70% drop. Okay, 50. Wow, that's horrible. Okay, last 90 days. Okay, 90 days ago today, we opened up at 1732. The high of the 90-day time frame was 22.59. Now, the bottom was today. So, do I want to jump into something that's actually at the bottom at this moment? No, I want to wait till it has 2 days to the upside. So, waiting for it to find a bottom first, then I'll think about jumping in. Until then, I just keep my eye on it. Okay, we'll actually keep an eye on this one. I don't like the fact that they keep cutting their dividends. At least I don't like Tyler. You have to start with little as $100. Yeah, you got to start and you should keep at it. Okay, next one. IBM, International Business. IBM. 189, the 190s. Okay, nice, interesting. Okay, look, the IBM, 189. The 190s are going for $1.93. That's over 1%. And it's IBM. We all know who IBM is. Let's take a look at the chart and see what the chart says. Okay, the high, the low, where was it? Where is it? All right, IBM's going to be like one of those ones we got to keep an eye on. Okay, so a year ago today, 131.64. Bottomed out at 120 21. Now, last 90 days, 90 days ago at 162.83. The low of the 90-day period right there. The high of the 90-day period right here. IEP was being squeezed by short sellers alleging bad numbers. Okay, well, it still didn't work. Okay, so bottom of the 90-day period, 158. Top of the 90-day period, 199. Last 30 days right there. 30 days. 30 days ago today was the 30-day bottom. Look at that. Week and a half later, 30-day top. Okay, so 30-day bottom, 185.18. 30-day top, 199.18. Okay, profit taking, bounce, profit taking, bounce. 2 days to the downside. So, what happens with 2 days to the downside? Okay, 2 days to the upside, I like that. I would have jumped in if it was on the list, but it wasn't because I didn't pay the dividend this week. Okay, 2 days to the downside, I'm going to wait until it hits the bottom, turn around and go back up. But better than that, when does IBM pay their dividend? IBM, not in March, February, that is 4, 5, 6, week number 6. Okay, so we're in week number 1 of the second quarter. We got to wait until week number 6. Okay, week number 6, which is 4 weeks away. So you only buy if it has upcoming dividend. Exactly. Because stocks only move for 2 reasons. Okay, they move up, they move down, but only 2 reasons. A known reason, which we can plan for, and an unknown reason, which we cannot plan for. Let me explain both of them to you. Now, an unknown reason is something like when the executive dies, or when they hire a new executive, or there's an explosion at the plant, or the oil spill in the Gulf of Mexico, or Exxon Valdez, the oil spill up in the up by Alaska. Something catastrophic that happens that makes something happen to the company. Something you cannot plan for. It just happens. Okay, you can't plan for that. But the second reason, a known reason is earnings, dividends, stock splits, seasonality. What do I mean by seasonality? Well, certain stocks move certain time of year consistently. Weight Watchers goes up at the beginning of the year. Hershey stock goes up in the beginning of February. Okay, oil stocks go up in March. Energy stocks gasoline stocks go up in June, July. Okay. Apple goes up in the fourth quarter. Certain stocks move predictably every single year at a certain time of year. You can plan for that. Dividends, earnings, you can plan for those. However, earnings over the years, I have found positive earnings stocks go down. Positive earnings stocks go up. Negative earnings stocks go down. Negative earnings stocks go up. There's no real rhyme or reason to it. There's no consistency. But there is consistency in dividends. Okay, a dividend's coming up right here. Okay, a couple of weeks before the dividend, the stock has a tendency to move up. All right. So IBM was on the 8th. We'll take a look at IBM on the 8th of February. Okay, 2 weeks before the IBM, 8th of February would be the 25th of January. Okay. Okay, so the 8th of February, right here, 5 days. Okay, what is 5 days from there? So it would be Thursday, the last Thursday in January. The last Thursday in January is the 25th, correct? Okay, the dividend for IBM is 166. So here's the 25th of January right there. Okay, the 25th of January right there. The numbers up here, what to remember. Okay, it opened up at 184.96 and it hit 196.90. Okay, did it go up? Yeah, it did. It went up higher than the dividend. The dividend was 166. Okay, on the very same day, she opened up at 184.96. 184.96, and the dividend was 166, and that gives me an exit target of 186.62. Okay, so if I buy it Monday, if I buy it on the 25th of January at the opening of the day was 184. See the number? 184.96. I add the 184.96 to the dividend, 166. I come up with an exit target of 186.62. I hit it in the exact same day. You get it in the morning, you're up by the afternoon, you make your 166. Okay, but again, here's the entry price right here. Okay, did it go up? Yeah, it did. Okay, it went up that day, went up that day, this day, all up above the price we bought it in at the beginning of that day. Because I do all my buying first thing Monday morning. All right, that being said, it's about 9:30. Jonathan, all right, so I think I'm done for the evening. Hopefully you guys learned something. Okay, for those of you who want to join in, hey, that's where we are. You go up here to the bio, 10minutetrader.com. There it is right there, 10minutetrader.com. Okay, everything you need to know, right there. Okay, this is we do live trading Monday, Tuesday, Wednesday, Thursday, and then Friday afternoon just before the market closes. This is all my social media sites right there, blah, blah, blah. The Patreon, the podcast, Instagram, Facebook, Twitter, YouTube channel, the books by James. Okay, James has written 12 books. I'm on book number 13 at the moment. Okay, these are the books by James right here. Where we go? Back here. All right, so that's everything you need to know. All right, all that being said, LA Sound Life, see you in the morning. You guys have a great day. Have a lovely time, and I will see you tomorrow evening, same time.